Welcome back to Compound Thesis. Our guest today is Henrique Centieiro. He's a senior research manager at Hashkey Capital. Henrique, welcome to the show.
Hi, Jim. Pleasure to be here. Thanks for inviting me.
Yeah, absolutely. So it looks like a good start to the day in Hong Kong over there. So looking forward to chatting with you. So quick question, as we get started, what made you dive into the digital asset space? Like, tell us a little bit about your background and what made you start investing in the venture side of crypto in particular.
Yeah, I've been in the startup world already for maybe 10 years. And I was kind of making my hands dirty already in 2013. I was experimenting with some Bitcoin mining, which I gave up, unfortunately, uh, in 2 or 3 months. Then 2015, I came back to the Bitcoin space. I was doing a lot of local Bitcoins, the website where you used to be able to do peer-to-peer trading on Bitcoin. And unfortunately, I heard recently that local Bitcoin is shutting down their operations. But 7 years, 8 years ago, it was a big, big website if you are in the Bitcoin space. And then finally in 2017, it was when I started to work full time in the crypto space. I started to work for a couple of startups, then moved to HSBC as a blockchain project manager, implementing the blockchain projects for the bank. And 1 year or so ago, I moved to Hashkey Capital, where I'm part of the research team. I do a lot of research reports. Personal level, I also like to write. I have maybe like 3 books already published. And this is what I do. And like crypto and decentralization and how these technologies can change the world for the better is really one of my biggest passions.
So fusing banking, fintech, startups, writing narratives, it all sounds like it makes sense. Doing a lot of research for you to be on the venture side of crypto, you found definitely the right spot for yourself. So for our listeners who aren't familiar with Hashkey or Hashkey Capital, can you just give us a high-level overview?
Yeah, sure. So I think I can say that the Hashkey adventure actually started in 2015 when Deng Xiao and Dr. Xiaofeng, both from the Wanxiang Group, which is a big Chinese conglomerate, invested 500K in Ethereum. So 2015, there was a phase where the Ethereum Foundation was in need for some additional cash injections. And they have decided to invest. So that was the very first investment of the Wanxiang Group, which gave birth to the Wanxiang Blockchain Labs. And from there, we have the creation of the Hashkey Group. So within the Hashkey Group, we have from brokerage and exchange, we are one of the 2 entities that is regulated in Hong Kong by the SFC. We have liquid staking, custodian, and then we have also Hashkey Capital, which is a totally separated business. For Hashkey Capital, we are now deploying our third fund. So far, we have invested in over 300 different projects. We really try to have a portfolio that creates ecosystem within our portfolio and bring a lot of value to our portfolio companies by creating ecosystem, by making useful introductions between founders and companies. And I think I can say that so far at the moment we have over $1 billion in AUM. And for this third fund that we have finished fundraising in December last year, we have fundraised $500 million, which we are now deploying. I think this is a very good timing to deploy capital because good projects continue to build. And so that's what we are doing at the moment.
So Hashkey, I mean, it sounds like it has a bunch of different strategies and arms to it. So how do you and the venture side work with some of the other groups across Hashkey?
We really try to make the research in order to be kind of ahead in the curve in understanding what are the coming market trends. So we do a lot of research in order to help the investment team to properly allocate funds and try to steer our investment thesis in order to precede the market trends. So at the moment, we really try to focus probably mostly in infrastructure projects, web3 infrastructure, DeFi, CeFi, data aggregators, data providers, all these infrastructure that is the foundation layer of the future of the blockchain space and the future of web3, the future of money. This is where we try to focus at the moment. So between the research team and the investment team in Hashkey Capital, this is how we work. We really try to do a lot of research work to support him. And it doesn't matter if we are a VC or an individual investor, right? You should have an investment thesis that is supported by research. Even if doesn't matter if you have $500 million or $500, you should have like, why are you investing in A and not in B, right? And you need to build an investment thesis, do the proper research, and say, I'm investing in this because I believe that this technology has a certain future, because I'm backing it with research, and not just because of market hype or some random YouTuber or influencers or KOLs telling you to invest. So we really try to bring this research layer to have a very solid investment thesis.
So how do you go about that? So when you're looking at different metrics, you're evaluating different projects or companies, like what are the type of metrics or factors that you look at as part of your research to determine whether or not Hashkey will back a particular entity or a particular opportunity?
Yeah, okay, that's a great question. And I will talk from my personal experience. To have the final investment decision, it's of course very important to have a more data-driven decision. But what I'm going to say now is also kind of an advice for any founders that are listening to the podcast. So it's very important to have the capacity to say more with less, right? Actually, there is, I think there is a book that has this title, The Art of Saying More with Less, something like that. It's a very interesting book. And when you approach a VC, the capacity to do that, it really shows that you are more a seasoned entrepreneur, and you have the capacity to concise what you are doing in a few slides or in a paragraph. So to start to engage with the VC, to open the doors, it's very important to have this brevity and concise capacity. And so we first, usually in our investment process, we have a couple of meetings with the project where we try to understand more about the team, the background of the team, the passion of the team for these projects, and why is the team building this project, right? Do they want to do just a quick exit, or they are really truly passionate on solving a problem? And also, what's the product? What's the total market for the product market fit, the technical side of the product, the technological and regulatory restraints of the project. So there are many different things that we look at. So there is no single metric. We really try to look at projects in a holistic manner. We try to look at everything: product, team, token economics, revenue model, tons of different things, in order to have all the data that is necessary to decide on whether to invest in the project or not.
Yeah, so a little bit of qualitative and quantitative to your approach. And I imagine that the assessment of the team, not only their experience, but their passion and commitment to delivering against an opportunity that they've identified, is a difficult process, or it's a difficult way to evaluate, because that is probably qualitative, and having a lot of really deep conversations and really getting to understand the founders. Can you walk us through, though, an example, like maybe of a project that you have backed and how you guys went through that process that you just described, and what the rationale was behind, one of those investments?
Mm-hmm. Yeah, sure. I think one of the things that we look at when we invest in a project, when we're trying to decide whether to invest or not, is this project highly scalable? And can it take advantage of the network effects that blockchain offers, right? This is very important because, I think in the blockchain space, we have Metcalfe's law. We can double the capacity of Metcalfe's law, right? Metcalfe's law says that a network value is a square number of nodes in a network. And in blockchain, more than the internet, we have way more interconnectivity. So we really try to see if projects can scale up using this compound effect of interconnectivity in the blockchain. So the project that comes to my mind is a project where we have invested maybe like 6 months ago, part of our portfolio. The name of the project is Peak, PEAQ, and it's on the Polkadot ecosystem. And it's basically a network to provide identity to IoT devices. And you can imagine that a blockchain network to provide identities to IoT devices can really take huge advantage of the network effects and Metcalfe's law, because network effects in IoT devices where you have electric vehicles, batteries, charging stations, solar panels, wallets, fridges, like all these different, everything is an IoT device, or can be eventually an IoT device. They can talk with each other, they can collect data, they can automate payments between them. I really believe that in the near future, we are going to have fleets of self-driving cars that go to the charging station and they automate payments between them. And for these, you need blockchain and you need IoT. And so the process of evaluating this kind of project, which is the example of Peak, was really to try to understand, of course, the capacity of the team, the technology behind it, but also the potential network effects in the future. So usually our investment process is we have a few meetings with the founders to get to know each other a little bit better and see if the project fits our investment thesis. And then we bring the project to our internal discussions. And then finally, if the team is happy with the project, we take it to the investment committee, and the investment committee has a final decision on whether to invest or not.
So I would imagine that your role is both, and correct me if I'm wrong, part investor, but also part business development. And, Hashkey has a great brand in the web3, but also, Hong Kong ecosystem. So could you walk us through a little bit about how on the business development side, you actually go about sourcing deals? And you talked about it being, a really ripe environment. Are a lot of founders, coming to Hashkey to pitch ideas, or are you going out there and doing some sourcing yourself? Just walk us through that, how you fill the top of the funnel.
Yeah, it's kind of both. So it's a lot of word of mouth and just our network. So I think we can say that Hashkey Capital is one of the biggest, if not the biggest, Asian venture capital firm. Although we invest worldwide, we don't have any geographical restrictions, but at least in Asia, we are extremely well known. So projects come to us from personal network of each one of the team members. Also, we also keep an eye on hackathons, incubators, consultants that typically help projects to fundraise, also connect with us very frequently, events, and also projects that just reach out to us directly from eventually social media or just cold pitch via email. So this is pretty much how we source projects. Oh, and also very important, a deal flow that is shared between VCs. So we co-invest with all the top VCs in the crypto space. And there is also a lot of deal flow sharing between venture capital firms. So that's also a big one. So yeah, I think we can say that Hashkey, maybe last year we have screened maybe over 3,000 different projects. And we have, in 1 year alone, I think we have invested over 100 projects. I was actually checking the number yesterday. So last year, second half of the year alone, which is like peak of the bear market, we have invested in close to 70 projects. So we really continue to have a lot of deal flow, and we continue to invest in projects that are building, solid projects that are building. And we really like to support founders during this bear market phase, because good founders and good teams and good projects really continue to build.
Yeah, especially if you are trying to evaluate the commitment and passion of builders or founders, seeing them operate in a bear market, I'm sure gives you a lot of confidence that they will stick around and continue the hard work as the market turns back around to be a little bit more bullish than the environment that we're in right now. So you said that, it sounds like the second half of your year was quite busy. 70 companies out of the 100 that you invested in was in the second half of last year. And then also you raised a $500 million fund that you're starting to put to work now. Can you share any insight into like the funding environment, 23 versus 22? It does seem a little bit quiet from the outside looking in, but I can imagine that you're quite busy. So could you talk through anything, in terms of size, stage, sector, like where you're seeing any interesting insights from year over year?
Yeah, to be honest, it didn't change much with the bear market. And last year, this year, I think didn't change much for us. Very luckily, and I think, again, thanks to our research and to our team, sometimes we are, in certain aspects, a little bit conservative. We were not exposed to any of these cataclysms last year, at least not directly exposed. Of course, the bear market, part of the bear market was motivated by it, and everyone is exposed to the bear market, but we are not exposed to those crazy big events and the insolvencies and collapses. And we have continued to invest, I think I can say that approximately 50% of our investments continue to be in seed phase projects, pre-seed and seed, and the other 50% in strategic rounds, Series A and Series B, 50% in terms of investment count. And now that we are turning to 2023, we continue to invest in seed phase projects. In terms of check sizes, it's a very wide range. So you can go anything from $200K up to $10 million, really depending on the project and depending on the stage of the project. Of course, a seed project, probably smaller check sizes, and a Series B or C, maybe a bigger check size. But maybe the only difference that I can say between like pre-bear market and bear market is check sizes and valuations are a little bit smaller, which is natural. The market is not so hyped, and also because there is less hype in the market, there is less, let's say, a FOMO, generally speaking, right? Because during peak of bull markets, projects are like sometimes, hey, we want to close this funding round within a week, and we have 10 VCs that want to invest. So if you want to invest, you have a week to decide. And at the moment, things are slower. It doesn't happen like that. So at the moment, the investment process is a little bit more rational, with more research, with more due diligence. But again, we continue to invest and support good projects.
It's probably healthy. And you took the words out of my mouth. Rational sounds like the environment, certainly there's a lot of dry powder on the sidelines. So I can imagine that there is more competition in deals, but, continue to see more support for the ecosystem as, investors like yourself continue to buckle down and help founders find product market fit and bring their businesses to market. So at the end of last year, kind of pivoting towards some of your research, you released a report on the 2022 DeFi Ecosystem Landscape, where you described DeFi market as just an asymmetric opportunity. And, one of the theses was that DeFi will have the ability to take dollar share or market share from TradFi. It was a pretty thorough and robust report, but can you share some of your favorite highlights from the work that you did there?
Yeah, sure. I think really DeFi can take a part of the market share from traditional finance, because at the moment in DeFi, all the products that you have in traditional finance, you also have in DeFi. You have lending, exchanges, we have asset management, derivatives, insurance. Pretty much we have in traditional markets, you also have in DeFi. But there is a big difference, right? Which is, if tomorrow no one shows up to work in Bank of America or HSBC, suddenly the clients cannot use the bank, right? There is no operations, and traditional finance is heavily reliant in having a lot of people to run their operations. DeFi is reliant on smart contracts. So if you look at these big DeFi protocols, Aave, compounds. I'm not going to give examples, but if no one shows up to work tomorrow, the users will not even notice it, because the operations part is 100% reliant on smart contracts. And I think that's the beauty of DeFi, and that's why DeFi can take part of the market share. Because, of course, DeFi protocols still have a lot of employees that are part of the legal team, of the marketing team, we have a lot of developers that continue to improve and update smart contracts and front ends. But DeFi protocols can be even more scalable. There is one thing that all the industrial revolutions have in common, I think. So first industrial revolution and second and third, there is one thing in common, which is we have big efficiency leaps. And we can measure these efficiency leaps by measuring the net income per employee of the businesses in these industries. So if we go back to 120 years ago, 75% of the population used to work in agriculture. Now only like 3% of the population works in agriculture. We were all replaced by machines, and machines can do this work way more efficiently. Now, second industrial revolution, we have machines and production lines. Third industrial revolutions with computers and IT. I think all these, we have big efficiency leaps. And now the same with DeFi. We have a huge efficiency leap where DeFi protocols like Compound can have multi-billion-dollar TVL and huge daily volumes based on smart contracts. And this is really one of the reasons why I'm so bullish about DeFi. And there is a big opportunity, a big asymmetric opportunity to catch there. And also at the moment, the TVLs are so low, the market is so depressed because of the bear market. I think this is even an added opportunity, right? Because our investment thesis continue to be exactly the same. The good market fit is there. It's just that the price and the value of these protocols is not adjusted at the moment, right? There is a quote that goes something like, people know the price of everything and they don't know the value of anything, right? And at the moment, I think people cannot see well what's the price, the real price, how to price the DeFi market. But the value is there, definitely.
Yeah, I mean, smart contracts always show up to work. There's no holidays and there's no time off. Code is always running. And so, it's great to see continued innovation across all the different aspects of capital markets, like you mentioned, and, the theses that you have in terms of more adoption for these protocols continues to play out. And, institutions as well as individuals continue to benefit from the innovation in that space. So pivoting towards kind of your outlook, any themes or sectors that you guys are particularly interested in? Are there new narratives that you guys are focused on as we kind of head further into 2023?
Yeah, so I think the sectors that we are the most bullish at the moment, it's Web3 infrastructure, modular blockchains. Modular blockchains allow developers to have added flexibility and also to improve cross-chain interoperability. Wallet abstraction is something that is also growing a lot at the moment. DeFi and how DeFi can connect with RWAs, real-world asset tokenization. We start to see a growing number of DeFi protocols that are bridging between the crypto world and the real-world assets and tokenizing real-world assets. And certain jurisdictions like Hong Kong will have probably this year RWA and STO-friendly regulations that will also help to open doors to this market. DIDs, decentralized identities, zero-knowledge proof technologies, layer 2s, scalability. I think these are some of the sectors that we are bullish on. And of course, we are in the bear market, but crypto, I think it's important to be, especially in these sectors, it's important to be part of a well-diversified portfolio in any institution in the world, right? If you are investing in equity, bonds, commodities. Having a little bit of crypto can actually reduce the volatility of the portfolio, because we have a better efficient frontier and a better Sharpe ratio of those portfolios. So I think we are more looking at these sectors. And of course, as a VC and as very new technology, it's not granted that all these projects will succeed. Actually, investing in these sectors continues to be a power law, a Pareto principle. 20% of the projects will give you 80% of the results, or only 20% of the projects will actually succeed. But it's precisely our work to identify those 20% of the projects that will succeed, and that's what we do.
Yeah, no, I mean it stacks up with your. I think the stats that you shared were 3,000 companies or projects that you looked at, and only 100 investments were made, despite having a war chest that you'll continue to be discerning, looking out to 2023 and where you put chips on the table. But not only from an investing standpoint, but also having the ability to engage directly with the founders and and make connections throughout your network, I'm sure helps grow the entire portfolio, and your company certainly will benefit from that value added high touch service, if you will. So thank you, Henry. It was fantastic spending some time with you today, kind of learning a little bit more about Hashkey, about your investment process, what you're seeing in many different areas of the web3 kind of crypto ecosystem. Any closing thoughts before we let you go?
So we briefly talked also about institutional adoption, and that's something that we see very positively also happening this year. Last year we had already some signs. We have a few big banks, Huntington Valley Bank, ING, DBS. All these banks are getting their feet wet with DeFi and DeFi adoption. And if you are an institution listening to this podcast, I think the infrastructure to participate is already there. You have custodians who have all the security and the regulations that are friendly enough for institutions to participate in the crypto space and in DeFi. And if you are an individual, I think things are getting also quite easier. 2 years ago, it was the DeFi interfaces were quite hard to use. Now, any grandma can use a DeFi protocol, to be honest. It's very easy to use Compound and all the other lending protocols. Not all the other, but at least the top 10 and DEXs and so on. This is all extremely easy to use. So I'll invite everyone to just install a wallet and do some experimentation, just with $10 or $20, and getting your hands dirty is really the best way to understand how the technology works, and getting involved and seeing the advantages of decentralization, of owning your own identity, and the fact that you can interact with technologies, having access to financial products, transfer money across the world, all without the need of a centralized party. And once you realize that, it's really life-changing.
It really is. I mean, and you hit the nail on the head. It's really about starting small and participating, because it can be quite daunting from the outside looking in, especially from a retail perspective. I would not say that every grandma could be successful or would be able to use crypto. I've struggled FaceTiming with my grandparents, let alone trying to get my parents set up with a wallet. But the industry continues to mature, and in the environment like we're in right now, the builders continue to push forward so that those experiences and those protocols and those applications continue to evolve to make a much more user-friendly environment, both on the retail and institutional perspective. But the groundwork is there. I agree with you. It's a matter of continuing to mature the technology and the regulatory clarity as we continue to flip the page from 22 into 2023. So This has been awesome. I really appreciate you spending some time with us, and we'll be back again soon with another episode of Compound Thesis. We're all about our YouTube, Apple, and Spotify, and all of our episodes are up on youtube.com/@Compound Labs. So go ahead, take a look, share it with a colleague, and stay tuned for our next episode. We'll be back again soon. Thanks again, Henri. It was great speaking with you. We'll talk soon.
Thanks for inviting me. Great to see you.